Welcome back. Let's turn our attention now to the insurance sector. Nuvama is positive on the insurance sector as it sees strong growth in the health segment post-COVID. To talk about the trends in health, life, motor insurance, we're now joined by Madhukar Ladha, Director at Nuvama Institutional Equities. Madhukar, morning, and thank you for joining in. Let's start with life insurance companies first. There was this IRDAI board meeting recently where they did consider the surrender value and what should it be. We understand from sources that while the dust hasn't settled on the issue right now, we've not got the final word, but it does appear that it could be a watered-down version compared to what was previously reported, which would have hurt life insurance companies. Where do you stand on life insurance companies per se, and what are the big trends?
Sure. Morning. Thanks for having me. This draft on surrender values has been a big overhang. And the previous draft, which was released in December, was quite harsh, I would say. The expectation largely has been that the watered down version will not dramatically change surrender values in the first 5 years. So that, I think, will be quite beneficial because a large part of the profits also of some of the non-linked savings product come from surrender values, right? Because the companies also spend a lot on acquiring customers. My sense is that definitely that the relief should be pretty big, and it's very important that the relief be there. We're still awaiting for the final regulation to come through. We have to wait for it. I think stocks did rally a little bit in anticipation of this watered down draft, and we're seeing a little bit maybe of some profit booking happening right now post all this news flow on this topic. On the broader trends, I think the sector has done very well, especially in the last quarter, and I think kudos to the insurance companies because I think they knew that March is a very high base, and that's why they've probably been aggressively selling in Jan and February. Both the months for the private sector life insurance companies has seen a growth of 20% at the industry level, and company-wide numbers have been even better. Especially the listed companies have also done very well in this period. Partly, and my sense is that ULIPs have also played a big role because markets have done well, and simultaneously par, non-par has also, I think through particular few channels, the push of there has also been good. Protection is also seeing a good comeback, which is quite healthy for the companies. These are higher margin products. So all in all, I think top line has been pretty good, and even until Feb, growth for the private sector is at about 13% at an EP level. So even if we were to say that March will not be that good, and in March last year we'd seen a growth of about 53% year over year. So still the sector as such should see growth for the full year. My expectation would be at least 5%. Broadly still very optimistic, and I think positively surprised definitely for Jan and Feb.
Right. Madhukar, I wanted to shift focus actually to the motor insurance space, and in your note also, you've highlighted that the new age players, be it Go Digit or be it ACO, they are outperforming the legacy players as we speak. But are you seeing this trend continuing going forward, and do you see a threat to the market share of the incumbents at the hands of these new age players?
Yeah, that definitely seems to be the case. So for example, Go Digit in about the last 3-4 years has taken up 6% market share in the motor space. ACO has also been growing consistently over a period of time. And we are seeing the larger private sector insurance companies lose market share. So both Lombard and Bajik have lost a little bit of market share. Lombard in the recent months there seems to be some improvement. And also commentary from the management has been that there has been some letdown in competitive intensity. That is also helping them, regain a little bit of their market share. So things are quite competitive. You can see a couple of months of letdown, and then competitive intensity picking up again. But motor is very difficult to call, and I think
What are the
sure.
sorry to interrupt. How much lower is the pricing by Go Digit and Acko compared to the traditional players on a like-to-like basis?
It's very difficult to call that out.
Okay.
And because the pricing is different at the OD. In the OD segment, TP the prices are the same, and in OD it completely depends on which channel you are acquiring. Players have also started giving discounts based on the agent through which they're acquiring business. So that's a very difficult question, and your pricing differs from models, variants, geographies, so it's not that straightforward out there. Yeah.
So then, just to put it in context for our viewers, what's the extent of the market share loss for ICICI Lombard and for the Bajaj Group in motor insurance? Do we have those numbers? Say over the last 12 months?
So last 12 months, actually, Lombard has done well. So the market share loss has only been about 20 basis points. But over a period of time, the loss would have been a little bit higher than that. Similarly, even for Bajaj. So Bajaj, if I remember correctly, the loss is closer to about 60-70 basis points. But on a slightly longer term, on a 2-3 year horizon, the market share loss would be slightly higher. Yeah.
All right, Madhukar, we leave it at that. Thank you so much for joining in and sharing your views on the overall insurance space, motor, health, and even life insurance. Thank you so much for joining in and sparing your time. That was Madhukar Ladha from Nuvama. Well, with that, it's a wrap on this edition of Trading Hour. The market continues to do well for itself, but from Rima, myself, and the entire team that put this show together, thank you so much for watching. Halftime Report takes the action forward.